The following is a presentation of TFNN. Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 10th, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there's having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find a gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here, and most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, we've got you covered. You can always send me an email, steve@tfnn.com. Just inside the subject heading, please put radio show question, and in the Tiger's Den, any ping will do. So let's go ahead and get this show started on wonderful Hurricane Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 413 points, 26,015 is the print. S&P's off 46 points. She's trading down 1 6/10%. Trading out at 28.33. The NASDAQ 100 off over 2%, 2 1/4. Trading off 169 points. It's trading at 72.02. Russell down 23. Semis off 30. Transport's down 334 points. That's 3% to the downside. Spot volatility index trading up 17%. We know what that means, or could mean, or should mean. It's trading out at 18.75. Gold's up $2. Silver's down 7 pennies. Light sweet crude off $1.78. Where's all the money flowing to? Hard to find on these charts out here. Hey, leading the charts the upside, though. You've got Esterline Technologies up $26 or 30%. Imperva is impervious to the moved lower. It's trading up $12 or nearly 30%. Tilray up $5 or 4%. To the downside, Booking Holdings makes sense. It's $1,800 stock. It's off $67. That's off 3.5%. Amazon is off $64. Google's off 25. BlackRock is down 26. So we've got some big movers and shakers. Of course, I want to take a look at what you want to look at. And I guess I do have one request out here so far. That first request coming from Kay. So let's give her what she requested first. Then we'll go take a look at the general markets, what Stevie's looking at, and what Kay is asking for. Can you give me 15-minute support on the NQ and the Russell 2000? So we can. You're going to get more than just the 15-minute because the chart I pull up will have multiple time frames. So let's start with the Russell 2000 out here. And the first time frame chart out here, the 15-minute, has a box that formed maybe within the past hour. The bottom is 1601. You're trading at 1602. The top is 1614. Now, what we have seen here this morning, we haven't seen a close above a top of a box since the huge decline as the cash market opened. So that would be telling you something, 1614.98. 30-minute, no profile. 60-minute, no profile. 90-minute, no profile. And the 120-minute, no profile as well. So that's the Russell 2000K. With regard to the NQ, the NQ, the 15-minute set of profiles, prices below them, had a bullish structured profile. This formed at exactly 10:30 this morning. And the bottom of the box, which is now resistance, whoa, my screen just blanked out. Kind of weird. Now, we're getting some storm stuff, but nothing like what they're getting up in Panama City. All right, 72.43. is the bottom of the box. 72.56 is the center. So any bounces up to 72.56 that aren't able to clear that, that becomes your real resistance level out here. Right now, we know on a short-term basis, price is below resistance. The top of that box is 73.34. There are no other profiles that I see. Oh, I take that back. The 30-minute profile that formed out here, slightly bullish in structure, meaning the center at 72.49, closer to the bottom at 72.17. We're at 72.41. So if we can clear that 72, the center line, 72.49, watch the price level of 72.96. You've got a orange-colored bar, but this really just began on the 60-minute time frame chart, and on the 90 and the 120, no profiles out there. So those are your short-term market profiles, Kay. Thanks for writing in. Hope that helps you out. Now, Maria, inside the Tigers Den, I see she put up the word VIX. And if we take a look at the VIX, I think that's probably the most important chart for us to take a look at. So probably wasn't intended for me, but it was something we were going to talk about no matter what. So let's take a look at this. First, let's take a look at the symbol structure out here. The very top line is the spot volatility index. Right now, it's trading up at 1841. Here's what we know about it. It's traded at 1841. The change today is $2.46. The 50-day exponential moving average is at 1336. We know when price is above the 50-day exponential moving average, that's when there can be a lot of price erosion in the market. Well, we're certainly seeing that as we speak right now. The rate of change today is 15.49%. Now, when the spot volatility index has a one-day rate of change greater than 10%, not intraday, but at the end of the day, we typically see a bouncer bottom the following session. So just keep that in mind. It's trading at 1842. If you go to the very bottom of the chart data, you're going to see that the June futures contract is trading at 1790. In other words, the fear factor of today, and I don't really like using that, but the spot volatility index measurement today, the spot VIX, is well above, not slightly above, not just above, is well above the furthest futures contract going out to June of 2019. Doesn't that mean something? Shouldn't that mean something? It means a heck of a lot, but it's only going to have meaning come the end of the day. This contango, this thing that's backwards, is telling you, is glaring at you, is just simply, it is Paul Revere riding through the spot volatility index Stevie chart. Hey, a bottom is coming. That's the message. It doesn't mean it's today. It doesn't necessarily mean it's tomorrow out there. But this abnormality, and you know, there are so many great ways to actually use the spot volatility index. It is just one of the most wonderful tools that you and I can use as a competitive edge. But it's really going to be about the end of day. How I wish right now it were 4:14 in the afternoon, because then I could have conviction behind what it is that I would share with you. Now, what am I going to share with you? Well, what we can do is we can take this tool, the spot volatility index, and what we can do is we can compare it against the 3-month, the 6-month, and the 1 year. But just simply knowing that it's traded above all the futures contracts out there, folks, just think about that. There's more fear about what's going on today than in June of 2019, or May of 2019, or March, or April, or February, or January, or even November of 2018. That is something to think about. We'll talk about that when we get back for this break. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So in my background screen, I've got the live coverage of the hurricane coming in, and I don't know if any of you guys, gals, caught the segment during one of the last storms, and it was a segment about just the wind was whipping. You had a reporter out there. Looked like the reporter was, like they were in a wind tunnel trying to fight the wind that was coming in, talking about just how terrible it was. And in the background are two guys in a pair of shorts just walking around, just to show you how fake some of this actual news can be out there. So I'm just kind of reminded about some of the scenes that I have in the background out here. So let me not get off track there. But let's take a look at the spot volatility index. And really, this is an end-of-day deal out here. And what I have up on my screen, see, you saw that, right? You saw that video, didn't you? I mean, was that just simply not the Weather TV? Was that just simply not the ultimate of just garbage? That we have to be careful what it is that we're fed, that's for sure. And I'm not going to give any garbage here. Instead, what I'm going to do is I'm going to just simply show you, and then you can make the determination. Now, the top chart here is the S&P 500, and the bottom chart is the spot volatility index. And it's compared to the 3-month counterpart out here. And you'll see I've got some green arrows. And whenever it gets above a threshold level, it's a threshold level that I established. Maybe it should be a tad higher, a tad lower, but it works pretty good for me. Whenever it gets equal to or greater than, meaning the spot volatility index is above, in this case it is, the reading is 1.01. I don't know what the reading will be at the end of the day, but what we can see is this is when bottoms form. Now, it's not necessarily to that day. It can be. It's that spike high. And then when price starts moving lower, that's when or when that ratio starts moving lower, that's when you can start looking for that bottom signal. Now, this just takes us back into June of 2016. And I promise you there was, in fact, in some of these instances, more fear, so to speak, with regard to traders and is this it, than we're seeing today. But whether there is, whether that's the case or not, the question is, how do you spot a good bottom in the S&P 500? Well, this is one of those tools if you want to go ahead and put the spot volatility index to your use. And look, you don't have to trade these things, but you certainly want to be able to understand what the spot is doing in comparison to its futures contracts out here, which is basically this screen, and basically have that kind of a tool. So again, depending on the close, we may be getting that next bottom signal today. If you get that combined with the one-day rate of change, right? So let's say the spot volatility index has a one-day rate of change of greater than 10% out here. We already know what that looks like. So you kind of combine those two things, and should that occur, at a minimum, you're going to get a bounce. It's a bounce or bottom that takes place inside of the markets out here. So that's enough about the VIX. The other interesting tool, I drag it out from time to time, especially on days or weeks, I should say, like this week. We're only halfway through the week, and the volume inside of the QQQ series ETF, we're at 175 million. Now, I don't know what the volume is going to be like come Friday, but I've used, from a weekly standpoint, in order to be able to try to identify good bottom candidates for it. So in the S&P, we know what to use as a tool. We use that spot volatility index. Inside the Qs, what I like to use is volume. For some reason, and I can't tell you what that reason is, I just know that it exists, the Qs make bottoms with volume. Period. End of story. Simple as can be. Just take a look at the green arrows on my screen out here. Volume is a bottom indicator inside the Qs, and I just simply, instead of looking at the daily volumes, just put this chart up here because we can go back further. This takes us back into 2010, and so you can see the significant bottoms that form out here in the marketplace. And if you take a look at the last two, the one in February, the one for the week of February 5th, the volume there, 522 million. So I use 300 million as kind of a gauge. That doesn't mean I'm going to turn away from 290 or 289 or something like that. I just kind of use 300 million as a gauge. Looks like right now, if we were to do straight line math, what we're going to see is we should be at about 300 million or so come the end of Friday. But volume could dry up, so we don't know for sure. If you take a look at that bottom that was put in out here in April of 2018, we won't see those lows again. We will not see those lows again. I am convinced of it. I'm trying to convince you of it as well. But and if we get a nice big volume reading come the end of the week, somewhere in that 300 million range out there, well, just like the others, expect this one to be a volume too. The Qs will make a bottom. When they do it with a big old volume weekly spike out there. So those are a couple things for you to go ahead and take a look at. Let's go to the next question that came in here. This is coming in from Tom, and Tom says, good afternoon, Steve. I say good afternoon, Tom. I entered a trade this morning on the JNUG at 707. Do you think I should hang on a bit or cash it in? This trade's off the GDX. So let's go take a look at the junior nugget out here. Let's take a look at it for you on the 3 different time frames. And what the nugget did, the junior nugget, what it did today, if we were just going to go ahead and use market profiles and you got in at 707, we would take a look at the bottom of this box and say, you know, a buy point would be the bottom of the daily profile at 705. And you got in at 2 cents, 2 cents away from that. We'd say, nice job. Now, Tom, I don't know if this is maybe the same Tom that is more of the short-term trader out here. And if that's the case, you know, I don't know if you're using a shorter duration or shorter time frame out here. But if you were looking for a nice entry in the junior nugget, 705 would have been it. Now, the last time that price was down here in this level, I'm going to use the trading day of September 27. And there was 16 million shares. I don't know what the end of the day volume is going to be. Typically, from a volume metric standpoint, attention to swing point, you'd like it to be less than 16 million. But what's going to influence the JNUG more than anything else, Tom, is probably going to be gold. And what gold is doing in terms of euros, yen, pounds, as well as dollars out here. And if we do go take a look at it, what we're going to see is right now you're at a new low for gold traded in pound sterling. So what you know about the Tom that's sitting at the pub in the UK right now having a nice little Guinness, he's sitting there with his little system hitting sell button, sell button, sell button. So he's not buying gold as we speak right now. In the case of the traders of gold in yen, well, it looks like they're taking out a previous swing point. So it looks like they're not hitting the buy button as we speak at 126 in the afternoon. If I take a look at the gold traders in euros, they're not hitting the buy button this afternoon. So you've got three groups of traders right now that aren't on your side to the extent that the junior nugget is correlated to gold. It doesn't mean, so I don't know what your time frame hold is on this. If you were trying to buy a bottom, we would have said 705 was the right entry price out there, or whatever that was. Yeah, 705. But right now, and gold is doing nothing in dollars, and it can't do anything in dollars, because if you're buying here, these are the three culprits that are actually selling as we speak right now. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So Earl writes in, says, hi, Steve. So let's say hi to Earl. Is today's sell-off enough for you to say washout, the washout that you wanted to see to call a bottom? And as of 1:30 in the afternoon, I can't make that call. I really need to see some end-of-day information before I can make that determination, before really the market makes that determination, right? So I know exactly what to look for, but in some instances, it's going to be an end-of-day indicator. Now, in the short run, Kay was asking about the 15-minute time frame for the NQ and the Russell 2000. So let's just do this here, Earl. For Earl, this will be the Earl and Kay segment. And if we take a look at the NQ, we know that if it's trying to form a bottom, it's given us that signal, and it did that as we finished the 1:30, which is now 1:31 in the afternoon. It did that when it created this nice bullish engulfing candle, key reversal session where the market is stretched. So we see the Rhodes momentum indicator. We see it's trading within its TAS market profile. But what it also did as we came into that 1:30 time frame is price got up to Stevie's red line, and that acted as resistance. So if there's going to be any more of a counter trend rally, what you're going to be looking for is for price to be able to take out resistance, the first level of resistance, because there's two on here. That's going to be Stevie's red line. Right now, it's priced in the 72, 57, 58-ish type area. If you see the NQ, whether it's between 1:30 and 2 or 2 and 2:30, if you see the NQ trade above that, Earl, what you should then see, okay, what you should then see is price head to 72.96. What we know right now as of 1:32 is there's the competition going on between the buyers and the sellers. We know where the buyers are hanging out. They're at the lows that we've seen, somewhere around the 7,200 level. We know where the sellers are. They're hanging out at Stevie's red line. They let the bulls go ahead and the buyers fire away. And they were just sitting there at that Stevie red line number, and that's where they're firing away. So who is going to win this battle? I don't know. But if there were going to be some type of washout bottom that you were looking for at a minimum, Earl, what you would at least see is on a 30-minute basis, you would see resistance levels fail. And as of 1:32 in the afternoon, they haven't. But you now know what to look for. We can do the same thing with regard to the Russell 2000. I believe that it, too, is forming one of these RMI bottoms. So let's go take a look at it. Let's go see where the fight between the bulls and the bears is here. Let's make sure that, in fact, that's what it's done. And voila, it has. So here what we can take a look at, and we had talked about a 30-minute profile. Well, actually, there was no 30-minute profile when you and I looked at that, but we did have one formed just now. And we can see that it, too, price is moving lower, doing less relative energy out there. Big old bearish engulfing candle. I say big and old. I don't mean old. I don't know why I even said that, but a nice big one. And you had price exceeding the high and low of the prior bar. That's a key reversal session. Right now, as we speak at 1:33, we can see the buyers trying to overtake the sellers. The sellers are hanging out at Stevie's red line. Why? I don't know. I just know that they are. I know where to find them. We know where to spot these guys and gals out there. So the real fight is on at this 1607, 1608 level inside the Russell 2000. Short-term bottoming signal, no question about it. And now the question is, can they take out that first line of defense or offense, really, from the sell side? And if they can, then what you can expect is at least a bounce up to 1618. And Earl, if there were to be a so-called washout bottom, at a minimum, what you should see is resistance fail inside the 30-minute time frame. Now, what you would do, even if price gets up there, is you're likely to see some kind of retracement. And so the question is it just a natural retracement? 38%, 61%, 78%, you just take a look at the short-term time frame out there. The other thing that, Earl, that you can look at, that I can look at, is we can go take a look at that New York Stock Exchange. If we take a look at the New York Stock Exchange right now, no signal whatsoever that it's that the washout bottom is in. And what I'm referring to is just a few days ago, the trading day of October 5th, that advanced decline oscillator reading had gotten down to minus 199.17. Remember, we talk about when it gets down below minus 150, it is giving you an indication of an oversold market out here. It can go lower. It went lower back in the February timeframe. This is the lowest low that we've seen on that indicator since that February timeframe out here. But if it is able to claim right now, it's a reading of minus 204.49. I don't know what the end of day reading is, but if it is above minus 199.17, what it will do is it'll set up the possibility of a divergent pattern. Divergent pattern that helped to mark the February lows, that helped to mark the August of 2016 lows as well. So we don't have that reading just yet, but that would be one other tool that you'd want to go ahead and add to your arsenal out there. So it's really going to answer your question. It's really going to be an end of day tool and indicator out there. So thanks for writing in. Hope that answers your question. No other questions that I see right now. So why don't we take a surf around? Oh, and then we do have one from Nancy. Nancy from Olympia, Washington. Nancy, thanks so much for writing in. She says, sorry, Steve, could you define RMI, please? I don't get to listen consistently. Yeah, RMI stands for Rhodes, Steve Rhodes, Momentum Indicator. So it's a set of tools that I've put together that help you identify and understand exactly what the markets are doing for whatever time frame. The reason that I knew, Nancy, that the 30-minute chart for the NQ and for the Russell 2000 were forming short-term bottom candidates was because it's got a 30-minute RMI signal right here. It says bottom signal if you're watching this on TigerTV. So here what you're doing is you're taking a look at the different time frames, 30-minute, 1 hour, 2 hour, 5 hour, because to go back to Earl's question, you know, is this a washout bottom? You want to see if there's going to be turns, you're going to start to see those turns on the shorter term time frames first. So there are signals that are present. The one for the 5 hour time frame, you have to ignore it. The reason that you have to ignore it is because this is set to giving me signals on the close. So this was as of the 9 a.m. session. The next 5 hour bar does not complete till 2 p.m. So these could actually vanish and go away based on the way that I've got those set. So it's a set of tools. Nancy, if you would like to learn more about that tool, how to be able to identify it, the exact 5 steps that you go through to see it, just sign up for Mastering Probabilities. You get a risk-free trial for the next 30 days, and there's an entire workshop that will be put onto your members page where you'll be able to watch that and go through the exact details on how that gets done. So a question here. Please show Mew. Did I find the bottom? So this is so let's go take a look at this. Is one for one of our denners who was trying to buy Micron. So let's go take a look at the 3 time frames out here, MU. See if this is going to give us any signals. And kind of like Tom and the Junior Nugget. So in the case of Tom and the Junior Nugget, Tom got in at 707, and we would say, okay, one of the things we'd want to go do is take a look at our TAS market profiles. And Nancy, these are other levels of support and resistance out here. And the bottom of the box, in this case here, the green line is measured at 4184. And if we were to say, where is a buy point in Mu, Micron Technology, by the way, Mu is also a Saki out there, it's okay. There's many more that are better, better. But we would say 4184 would be an entry price. That's at 4266. So we come back from this break. Let's go take a look at Micron Technology. See if there's anything else we can figure out for our man Z and the Tiger's Den. We'll be right back. Yeah, you saw it.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we're trying to answer, and I see Nancy also has a position in Mu out there. And so we're kind of getting two birds with one stone. Nancy, that workshop is called The 5 Reasons Traders to Fail to Spot Bear Market. So that's the name of that workshop. That'll give you the 5-step process for the Rhodes Momentum Indicator. It's probably, to me, it's one of the most amazing tools out there. There's a couple of them that I use, and you get the advantage of that. You saw that in today's newsletter as we were discussing the markets out here. If we take a look at the weekly time frame chart for Mu, here's what we're going to see for Micron Technologies. Now, we did a workshop last night on really what was how to master the A to B equals CD pattern, but truly was also about being able to buy or sell the D point. Now, the D point is the culmination of that A to B equals CD pattern. So in Nancy's case, or in Z's case here, if we take a look at that, now we're on a weekly time frame chart. So what do we know about the daily? What we know about the daily is it has tested and rejected the bottom of its task profile. Also, by the way, on a daily basis, let me give you a number that from a daily standpoint, you really like to see price get above, and that's Stevie's red line. And it's been tested so far. Oh, this is going to be hard to do. No, it's not going to be hard. It's not going to be impossible. I just said it was going to be hard to do. Stevie's red line right now is priced at 42.77, and our actual high today I think might have been 42. What was the high so far? 42.75. So you'd really like to see price get over it. That doesn't have to be today, but certainly that would be, since in your case, you just got into this today, you'd sure like to see it because that is resistance. There's another level of resistance at 46.49, the top of the box out there, but you'd love to see MU be able to get above Stevie's red line. Now, on a weekly time frame, what you're always looking for at the completion of an A to B equals CD pattern is the cavalry. The cavalry shows up in something that's moving down by rearing itself, by showing itself. In this case here, it did that on the trading week of September 10, 2018. Now, that low thus far is held. The reason is because that was a hammer candle. So if you're right on the trade, you're buying the D point. Now, the nice thing about a hammer candle is the actual ultimate buy for a hammer candle really is on candles 3 through 7. We happen to be in candle 1, 2, 3, 4. For price to come and test maybe 50% of the way into the wick or lower. And 50% of the way into the wick is probably in the 42.38 level. But on top of that, both Nancy and Z, what you have out here is you have a brand new weekly profile that is formed. And the bottom of its box is 41.98. Now, this is a bearish structured weekly profile. I mean, the center line is a little bit closer to the top than the bottom. So you've got resistance, two resistance levels, 45.88, 48.48. As we speak right now, but it's up against good support. You've got the hammer support, you've got the TAS market profile support on a weekly basis, and this is what you need. This makes for a good possible trade. Will it work? You never know. But you're at a place where you're in towards a bottom, and if it doesn't work, what it means is that price is probably headed to the top of the monthly profile, and that level is 36.07. So I got CNN in the background, and they've got what's his name, our governor out there, and for the state of Florida. So the hurricane is a nasty thing, and a Cat 4 or 5, 3 doesn't matter. Making landfall, you know, that can do just a tremendous damage out there. But if you're running for office, and this guy is the hurricane tracker. I live here, so I know. And he does a good job of getting everybody out of harm's way. Not everybody gets out of harm's way, but you know, if you don't, it's not because you weren't warned. And he does a good job of positioning everything. He's a good logistics guy. So he's running for the Senate, right? So there's nothing like being able to go through, you know, so he's truly on stage as we speak right now. Okay, so that was it for MU out there, and hope that helps everybody out. We've got some other questions that have rolled in here. One from Tony. And Tony says, I was a former holder of AMD. I know it's a battleground stock. Do you think today's gap fill of 2507 has a chance to hold? Where would you buy and stop out, please? So let's go take a look at this for Tony. And so we're in the chip sector out here. So I don't know, maybe that means something. But for Tony, let's go try to figure out. So Tony's asking us a question about the gap fill at 2507. And at 2507, what he's really referring to, folks, is the trading session. We'll go ahead and just enlarge in this a bit. The trading session here from September the 4th. And what he's noticing is a little gap. And let's go ahead and draw this in. Let's put a little yellow. Is it going to be yellow? What color do we choose? Let's use yellow horizontal line out here. What you're going to see, is that the gap? It's a daily chart. So you said 2507. 2507. Let's deal with what it's doing today. You're asking about 2507. Where's 2507 out here? I don't see the 2507. But can I do? I'm sorry, I'm just looking for you because I'd like to try to get to what it is you're seeing. But let's take a look at what it is doing today on a daily time frame chart. Make sure I got the right chart. AMD. So gaps are either to the upside or the downside, or signs of strength or signs of weakness. Now, you really like to see it when it's a sign of strength and is followed by volume. On September 4th, which I believe was the day after the Labor Day holiday, if I'm not mistaken, you had 192 million shares to the upside. So far today, you're pulling back into that sign of strength, so to speak. With 104 million shares. If we go a little further over on the left-hand side, right around that price here, was a trading session of August 27th. That had 327.5 million shares to the upside. And there was a gap there as well. Now, that gap, Tony, was right around the price level of 24 bucks even Steven. So at this stage, volume's pulling into a breakout area on lighter volume. You at least have that going for you. But let's take a look at Stevie's other charts. You're below profile, so we don't have anything like we did with regard to Mu. micron. But what we do have today that was invisible on the other chart, because this set of tools here tracks this, is what price pulled back to today is the Tom DeMark setup trend line, this little red dashed line. So, which is really cool because it either works or it doesn't work. But in answering your question, do I think that maybe today has a chance of holding? The answer is yes, because we've seen an area where there was a breakout that had volume. We go ahead and we put on Stevie's other chart. What we see is it's pulling right back in the support level of that Tom DeMark setup trend line. Today is going to be, or looks like it's going to be, a TD setup 9 count to the downside. That means resistance in this case here is going to be the high from September 27th. So tomorrow, September 28th, I should say, and that high is 32.78 out there. So, yeah, it's got a chance. It's done everything to tell you to come back to support. Now, if support gets broken and tomorrow you see lower lows out there, well, then it tells you that support has broken. Boy, you needed me to tell you that, like you needed a hole in the head. What you do have, though, so you got to give it a little bit of room out here. And the reason why I would suggest that is because on the weekly time frame chart, what AMD has is a bottom profile that formed last week at 24.73. So you're asking where's your go, no-go zone? A close below 24.73 wouldn't be good. A close below 24 even Steven would be even worse. Steve Rhodes with TFNN. We'll be right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So the only question so far that we haven't gotten to, we'll use this to really end the show, comes in from Mike K in the Tigers Den. The question says, Steve, did the IWM bottom? Mike is long from 74 in the TNA. And I don't know the answer to that. I can just simply say, Mike, that at this stage of the game here, when we take a look at the Rhodes momentum indicator signals for multiple time frames, the 5-hour time frame is not going to confirm one way or the other until we get past 2 p.m. But on a 30-minute and a 1-hour time frame, we do, and even on a 2-hour time frame, we do have some bottom signals out here. It's the 30-minute that you really want to kind of focus on at first. We talked about this, but like it doesn't hurt to go over this again. We can see 16-14, 16-18 is the top of the TAS profile. From a short-term standpoint, we know that this is where the bulls have, where the market got overstretched, and they've gone ahead and decided to, some bulls have tried to take a position. I'm assuming at this stage, in essence, you're one of those people that are in here. Prices dealing with the Stevie's red line right now, right around 1607, but we're just at 1608.70. So it's dealing with this back and forth in the resistance level. You'd really like to see this close above the top of its profile. So if we, in order to give you some type of indication that maybe it has, if it doesn't, then it's just really a counter trend rally at the moment. And if it can't get above the top of its 30-minute profile, again, 1615, 1618 is the range. If you look at the well, it's 1618 on a 30-minute time frame, 1614 on the 15-minute time frame out there. So those are your levels of resistance to deal with as we speak right now. So I hope that helps you out. I don't see anything on a daily chart out there that would say it has. Doesn't mean that it hasn't. But you know what you can do, Mike? Even if you're in that trade, if it doesn't make a lower low today, just watch that spot volatility index. Watch that. See where that ends the day. Let's face it, if you have a one-day rate of change greater than 10%, pretty good chance you're going to see an overnight bounce, and maybe there's more to get out of TNA. Folks, thanks so much for being here. Stay tuned. Your favorite polar bear, David White's up next. Tom O'Brien, 3 to 5. I'll be back with you on Terrific Thursday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.